The biggest mistake in real estate is not buying at the wrong time or selling at the wrong time. But the biggest mistake is playing the wrong role inside the market. Because in every cycle, some people are forced to exit, while others are quietly positioning. Markets don't move randomly, and markets do not punish people equally. In the same exact conditions, one person exits at loss, while another enters at the best pricing window. Same market makes different outcome. So the real question is not this is a good market or a bad market. In fact, the real question is what role are you playing inside it? Because every market runs on 3 layers: exit liquidity market, friction structure, and positioning. The first layer is exit liquidity. This is the reactive capital. They enter based on headlines, not structure. When everything feels safe, that's when they buy. But what they are really doing is completing someone else's exit. Now the second layer, which is market friction. This is where most people think they are being smart. They understand the risk, but they wait for the clarity. But the issue here, clarity is not for free. By the time something becomes clear, it's already priced in. So they don't lose aggressively, but they lose something more important, which is time. And they are not losing on price. In fact, they are losing on positioning. And in real estate, time is the only thing you cannot refinance. Now the third layer, which is structural positioning. This is what actually drives outcome. These buyers do not react to prices. In fact, they position against structure. They enter when the decision is already made physically, such as a bridge is already built, a metro line is under construction, or a major developer commits to a district. Here the concrete is already poured, but attention is not there yet. That's exactly where positioning happens. Not when it's visible, but when it's not visible. This creates what I call the institutional gap. Phase A, logic is clear, but ignored. Phase B, logic becomes visible. And phase C, sentiments takes over. Most people wait for phase B because it feels safe. But by then, the opportunity is already priced. So the difference is not the market. In fact, it's the role that you play inside it. And uncertainty does not destroy opportunity, but it filters the participants. It removes reactive capital and rewards structural thinking. The market is not irrational. It simply exposes who never understand it. And through our lens, we don't chase the market. In fact, we decode the structure and position within it.